Hi traders, in today's video we are going to see why an investment in gold right now very much depends on your base currency. We're going to do some currency translation work as we did yesterday. This in turn brings us to look at the XY and infer from its current behavior what we can expect for the price of gold in dollar terms. And finally, I'm leaving you with some specific short-term retracement objectives for gold, as well some provisional upside target levels. So let's get it. Remember that line we used yesterday to establish the upside target in gold when we measured gold in a basket of currencies, that long-term line based on the 2009 lows here, the crash of the financial crisis. We established that line, we traced that line up here, and we used that to get an upside target in gold in multiple currencies, or in a basket of currencies. That line, if we switch to a dollar gold chart, that line placed on the same price levels on the chart of gold in dollar terms really isn't that useful as it is on the other chart. It brings us, as we speak, to an upside target here well above where we are right now. So we will not use that line as in the other chart, but we still are using a parallel to it. We traced simply a parallel to the current price action, and we see that this line in turn, well, while it offers some structure here to the gold price in dollar terms, it got a lot blurred here during this sideways price action since the first top here in August 2020. We got a typical move of an acceleration here, a parabolic move up here towards that mentioned at top, and then we got a second top here, making, in traditional technical analysis chartism work, a potential double top. It's yet a potential double top because it has to be confirmed by a break lower from the signal line that right now lies here at $1,680 per ounce in dollars. So we don't have that confirmation, but should we get that confirmation in the coming weeks, the minimum objective for the downside move in this case brings us down here, interestingly enough, by these traditional measures, just simply taking from the low of the between the two tops here, the signal line projecting the same distance downwards, it brings us to 1265, and this is more or less here a crucial support level that we had on a chart, independently from that traditional projection, that downside projection. But just because of how the price action emanates from here, we had a very dull market until that moment, and this was really the moment where we started having some acceleration and some rise in volatility from that moment on. This was May 2019, so we have that as an important attractor on the downside for the price of gold. We have another intermediate level here in the 1400s, but the two important levels are really the one that I think bears are now having an eye on, which is this 1680, which is intersects a downward sloping line here in late July this year, and then we have the coming intersection coming for February next year on that lower level for that downside projection. So we can see here that the potential upside that we saw in gold when measured in other currencies or in a basket of currencies might not translate if you are dollar-based, or for dollar-based investors. The narrative might be a little bit different. And when we look at, or since we are translating here the price of a commodity, in this case gold, into dollar terms, we want to have a look at the XY here, and also here come up with some potentials here, especially on the upside here. If we are talking about gold having or suffering from downside pressures, we have to think inversely on a stronger dollar as one of the main causes of the descending price in gold. So if you look at the XY here, we do have some important resistance coming up. One is just above here, overhead resistance at 108.72. We'd have two layers of resistance here at 113, 116.80, and then corresponding here to the top here in 2001 at 120 for the DXY. So plenty of room up to go. This would be negatively translated into the price of gold. And if we just take here Fibonacci extension just as a help here to organize this parabolic price action and see if those levels that we projected into the future might make sense from a Fibonacci extension perspective. And we find out that it is pretty much coincident here. If we take the lows here from June 21 and we project the Fibonacci tool here to that first layer of resistance, and we watch the price action in the past, if that fits into the divisions of the Fibonacci scale, we see that it makes sense. When we see that such a placement of the tool makes sense from the historical price perspective, then we can infer from here that the future projections of the Fibonacci scale will also fit into the overall support and resistance structure of that market. And indeed, we see here how these two intermediate levels in the Fibonacci scale are pretty much coincident with these two layers of resistance that we see on the way up to the 120 that corresponds in this case to the 1618% extension of that parabolic move that we are currently in. So as a means of conclusion that we might draw from this combined chart analysis, first, gold might provide positive returns in the long term, but less so for dollar-based investors. Second, near-term targets for gold in dollar terms are 1676 on the downside, with a continuation to the aforementioned 1265 towards February next year. This is the minimum objective of that double top figure, yet to be confirmed here in the chart of the gold. And on the upper side, $2,680 per ounce could become a more realistic target, but only if gold invalidates this potential reversal figure and hurdles above the 2,600 level here. Also here we could establish, we could use the Fibonacci figure just to come up with that projection in the long run. And here we have, and we can also continue working with these parallel lines and see if we have any line here coincident with that level. So we have the 2014 here and 2612 here, with a target, interestingly enough, similar to that one. So we can just take one of these targets and place it here, more or less where it's coincident with this 1618 extension of the Fibonacci. Also more or less for January, February 20 23. Okay, hope you enjoyed the video. See you in the next one. Bye for now.